All right, let's get right into it because there's this really fascinating paradox playing out in the markets. We're seeing some incredibly powerful, almost hidden forces at play, and they could be setting the stage for Bitcoin's next huge cycle in a way most people aren't seeing.
So this is the big question, right? You look at the stock market, and it is absolutely soaring, hitting record after record. And yet, Bitcoin's price just feels kind of stuck. It seems almost lifeless. So what is actually going on behind the curtain? Well, the answer isn't what you're seeing on the surface. I mean, just look at this contrast here. On one side, you've got the S&P 500 just completely fueled by optimism. On the other, Bitcoin is stuck in this sideways grind with extremely bearish funding rates. Some analysts are even pointing to serious manipulation in the leveraged trading markets, where there's this active force trying to suppress the price every time it tries to inch upwards.
But what if all that downward pressure is just creating a giant coiled spring? I love this analogy from the head of macro at Swiss Block. It perfectly captures the tension building up. Think about it. The harder you hold that beach ball under the water, the more explosive it's going to be when it finally breaks free and shoots back to the surface.
So let's unpack that tension because that's where things get really interesting. We'll start with the first major tailwind. See, behind the scenes, far away from the day-to-day price drama, a literal tidal wave of liquidity is being quietly pumped into the financial system, all thanks to some strategic government moves.
$138 billion. That is how much of its own debt the U.S. Treasury has bought back just this year. This is not normal. It's a record-setting, totally unprecedented move that's injecting a massive amount of cash directly into the market.
And here's the thing. This cash isn't coming from just one place. No, we're seeing these aggressive Treasury buybacks, the Fed is expanding its balance sheet, money's being released from the Treasury's general account, and you've got tens of billions flowing through these repo facilities. It's a full-on, multi-pronged approach that experts are calling a multi-channel liquidity environment.
So why does all this matter? Well, we've seen this movie before. We have a historical playbook for this exact scenario. When this much liquidity floods the system, risk assets, like stocks and crypto, tend to just rip. We're already seeing it happen in stocks, and historically, crypto has always been next in line. This is exactly how those big, generational runs get started.
And listen, this isn't just some theory. Check out this quote from the director of global macro at Fidelity, a firm managing $7 trillion. They see Bitcoin building a huge, strong foundation right now. So while the average person is feeling fearful, the smart money, we're talking big institutions and whale wallets, they're quietly accumulating. They're buying like crazy.
Okay, so a flood of liquidity is a massive tailwind for sure, but it kind of needs a spark, a specific trigger to really ignite the market. And for a lot of people, that trigger is regulatory certainty. All eyes are on this one key piece of pro-crypto legislation called the Clarity Act, which is designed to finally give us a clear legal framework for digital assets. Now, according to research from Grayscale, there are 3 key dominoes that need to fall for this thing to become a reality. The first one, it's already down. The second, which is the confirmation of Kevin O'Wursch as the new Fed chair, really seems to be in motion. So now, we're just waiting on that final domino.
And why is this potential new Fed chair so important? Well, just listen to his perspective. O'Wursch thinks that AI is about to create a massive productivity boom that makes basically everything cheaper. And that means we could see strong economic growth without the inflation that usually comes along with it. And what does that pave the way for? You guessed it, rate cuts.
And here's the really crucial part. The political will is finally starting to align. Senator Cynthia Lummis recently said there's now both bipartisan and presidential support to push this law forward. I mean, breaking through the political gridlock would be the single biggest thing to ever happen to crypto regulation. Period.
But, while U.S. regulation is obviously a huge piece of the puzzle, this isn't just a U.S. story. The third major tailwind for Bitcoin is actually a global phenomenon. The rest of the world is really starting to wake up to what this asset is all about.
Think about it. Financial censorship is becoming a more and more common tool of statecraft. Some people are even calling it Operation Economic Fury. Because of this, entire countries are starting to see the danger of relying only on traditional financial systems. They're realizing they need a neutral, hard-to-seize reserve asset, and that's where Bitcoin comes in.
So when you put all of these incredibly powerful forces together, you've got the rising tide of liquidity, the growing institutional interest, the shot at regulatory clarity, and this massive global demand, you have to ask, where are we really in the grand scheme of crypto adoption?
This slide just floors me every time I see it.
Despite all the headlines, all the noise, a full 95% of investors around the world still have zero exposure to Bitcoin. Zero. If you own any at all, you are so far ahead of the curve. You are still one of the earliest adopters.
And this right here, this really puts the potential into perspective. When you compare the growth of Bitcoin wallets to the adoption of the internet, we are sitting right around 1996. And we all remember what happened right after that. The internet just went absolutely exponential.
You know, the final piece of this whole puzzle really comes down to one thing: trust. We're diving headfirst into an age of AI, deepfakes, and incredibly sophisticated cyber attacks, where it's becoming almost impossible to know what's even real online. In an environment like that, a system built on pure math, a system that cannot be faked or counterfeited, well, that's not just a nice little feature anymore. It's becoming absolutely essential.
And that really leaves us with this final massive question. In a world where our digital and financial lives are becoming more and more fragile, where information itself can be faked, what is the real value of a globally trusted, provably secure system? The answer to that question might just define the entire next decade of technology and finance.